Good morning and welcome to the Crypto Day Morning. Today's date, Saturday, 17th of November, 2018. Welcome to the Money Charts channel, all bets, trades, and of the like, within one's own risk reward. And talking about the risk reward, and I just brought up a random coin, which is Stratus, and I like the code symbol STRAT because that's the symbol I've been using, or the short form, to put the word strategy into one syllable. Strat. What's your strat on this situation? Stuff like that. But talking about here is, well, how amazing would it be to, like, well, you just sell here, you can buy here, sell it here, oh, maybe buy it here, sell some here, buy it back here, sell some here, and, well, where do you buy next? You're back down to these previous lows. Do we buy here? Of course, you don't have a time machine. You really don't know when the lows and highs are going to come in. But what do we know? Well, we do know that a lot of these coins make miraculously large moves. Even from the start of this goes from 1935 up to 18,000. So way back in here, let me just reset the scaling on this. When you look at this type of move, going from even at like 5,000 up to like 18,000. If you thought this was up too much, well, you would have been right in the sense that you could have, at least you would have been right if you're able to buy it back in here, which wasn't all that difficult. But having a situation where you sell maybe here, not at the top, maybe even here, means that buying back here, or if you sold here and you bought in here, well, so be it as well. But going to the rest of this chart in here, if say you would have thought in here it was up too much and you sold decently, but more importantly, you got to say to yourself, you need better than 10x moves with these charts. So 6,000 it came from, so over 60,000 would make it like really, really overextended. And then you'd be saying, oh my goodness, I just got to sell a lot, like here even, and let alone definitely up in that part there. But if you were wrong and selling here, and we go forward in time, the event of the sale would have taken place May of last year. But you could have started to buy back October or so of last year. So in contrary, it all worked out very well, even if you were far away from the high. The whole point, again, is when markets go up big, to me, risk-reward strategy says there's a lot of good profitability and making decent size sell orders at these levels, whether you sell everything or large portions, either way. And then of course now, if you were to think that this was too much, again, in here, say 26,000, here you're looking at 18,000, you can technically buy it back. It's only been that of a year and a half since you would have been like, okay, it's up a lot here, and just maybe your buy order that you put in to say, well, it's going to come back to where it came from, back then you would have been thinking, okay, I'm going to put a buy order in for 11,000. You know what, you just might end up getting it right now, as of course the movements of these markets portray himself out to be. But the bottom line is, markets go up really fast, they go up down really fast. Within the doji chart, looking at the weekly time frame, but even scrolling it within the 3-day, every single time you've had good gains above the 18 average of highs, how did selling work? And then when price action went below the 18 average of lows, how did the buybacks work? This has been a very interesting, choppy, up and down coin. It was almost, from what I've heard, made as in like a joke way back in the day. Like people were just fooling around, and it's stuck through time and still is very well, or doing well enough on the overall market cap. It's now come down a decent amount, back to where it came from in here. It's at 46. So getting close to the summer lows again. Therefore, selling up here worked out. Buying back here is what the play would be in order for such. But every time you would have guessed above the 18 average of highs that there's a top, well, guess what? Your buyback came every single time. Now let's move this on to Bitcoin against the US dollar. When we look at situations here, how would we be doing if we traded overextended in here? Well, it was an easy buyback in here. That was easy. How about in here? Are you still looking to buy that $45 sell order back? After all, it was at 11, went to 45. It was at 2.5, and it went to 45. And that was a supreme game. Selling in here. Also, I mean, you could have got in on the break even here. Selling up here, well, you better hope you got back in this area here. You might not have, depending on your order. Selling up here after it broke resistance, well, that worked out because one, it broke this level, so you really can't start saying that, hey, it's up a bunch until at least around here. And then, of course, a very good correctionary move. So now the question is going to come into play that if you thought high was, say, in here, somewhere around 4,600, how's that going to work out for you? It still might. So of course, overextended here at about like 11 or about like 12, 13,000 plus. Well, you can buy back now, and you can wait for possibly even further decline. But the base currency for this is the US dollar. And I don't care if it's a US dollar, Canadian, Australian, a yen, a euro, a pound, it doesn't matter. They're all fiat. They're all something I don't want to hold on the long-term time frame, and they're all in a musical chair kind of game, possible for a major large fall. But using that type of strategy within altcoins, stuff crossed with Bitcoin, when you're already wanting to be long Bitcoin as well, you're more naturally going to have the more up and down choppy action with other markets upon such. And when looking at Ethereum and using the same sort of thinking, when you're up too much, how would that have worked out? Because getting technical here, selling at this point in here is an interesting play. Because I don't like it. I really, really don't like the situation here. Coming back to that major key level of resistance, like was the case in January of 2016. Because you think you should come back down here short term and go like this before lifting higher. Of course it didn't. Maybe you're just going to go sideways, but it could go up very sharp after that. And I'm not going to count this Pierce move higher, but I will definitely count this congestion range in the summer of 2015, where, of course, the line is and as it broke out from. So the first place where I would be considering it overextended would be here. In selling at this high, the best you could have done is small profit. Selling anywhere up here worked out because of this move down here. And even if you sold here, bought in here, and did nothing through this point in here, it's still mathematically going to work out for you because now you're talking about overextended markets again. Well, starting here, any time above that has worked out. And of course, any buys in here, sells up here, has obviously worked out again. But that's the whole thing that I'm looking for, is for the choppy up and down market actions within the Bitcoin cross and even the Binance cross as well, the Binance coin. Because I'll essentially just keep on playing all of these markets against Bitcoin and Binance coin like I'm doing. And my Bitcoin and Bitcoin value of all coins accumulative will keep going up and down. But long term, within this strategy, it should be making moves towards the upside. And then, of course, I'm continuously, obviously, following the Bitcoin US dollar chart, which for me is about the same as the Canadian dollar as far as its movements is concerned. And with Bitcoin being that as a currency, aka that of a form of money, or at least something that can work towards such, well, then make it work towards that when you have big gains. As I look at this as far as cryptos, whenever there's something of luxury items that you would like to buy within cryptos, it's probably better to buy them on decent moves higher. If there's anything you know you don't need now, but you will need later on, then as markets go higher, you can buy it, and then you know you're going to need it, say, 5 months or 8 months from now. Anything you bought last winter, last Christmas, for your summer, even though it was 6 months away, or for any time you need it in July and August of this year, you got good deals on because you would have sold it at maybe 15,000 or 13,000 Bitcoin, or even at 18, 19,000 Bitcoin. In fact, I did some mathematics. If you knew history and time, like so perfectly, this is what we would have here. If you were to say use $10 at the start and buy when it was $2.50 in here, just put an order in for $2.50, and then I want you to put a sell order for $15, sell it all, and then buy it all back at $5, sell it all at $16, buy it back at $8, sell, then just go $2.25 for your next sell order. I mean, how do you know that? How do you understand this number pattern like this? You can't. Buy at 75, and then sell at 1,000, buy at 375, sell at only 625 here, which was below the previous high, buy back at 175, then go 19,500, sell. And that's where we stand right now. And you would turn $10 into 13 million if you could do that. And when I say if, you won't. But what you can understand is that compounded gains mathematically amongst the trading situation of large moves, 200%, 400%, 500% moves, 60%, 70, 80% down. You're talking about having 90 to 100 different swing trades in a year for one particular cross at whatever volatility you're able to get on it, and have sick amount of gains available to you is most certainly available amongst the cryptocurrency game. And for those in calculated gambling games, and when I say calculated gambling, advantage gambling really, advantage gambling games, that means you are gambling with a long-term edge. Sort of like if you owned the slot machines, or if you were able to guess a card, a random card, and you got 60 to 1 odds on a 52 deck card. Well, if I'm going to guess it 600 times, I'm probably going to win it like 11, maybe 12, and I would profit because of the odds. So in games like poker, that means you are able to beat any rakes that are available, tournament buy-in fees, and even in the real world, hotel fees, dinner fees, and I went through a lot of them throughout my poker playing days. Once you can beat all of those costs, then you're expected to win. Sports gambling, well, if you're getting even odds for something you know has a 54, 55% likelihood of occurring, you're going to win. And in this, when the long-term dynamics state that you are going to have profits, then that's what it comes down to. Understanding that mathematically, because of this extreme volatility, that if you understand as much as you do, or much as you can as far as the numbers, chart patterns, technical analysis, different strategies, and how to portray your trades and position sizes, that is going to magnificently have amazing results amongst the portfolio. Now, overall, when markets have this type of move of going down and grinding, yes, it makes it very, very difficult along the way. But when you find situations where you protect profits and different things, then you can come out of the game in practically every single market on the positive side. Thank you for tuning in and have yourself a magnificent day. Bye-bye.